Currently trading a prop firm challenge with CFDs or futures. I just bought the NQ at 28,235. Did you buy the dip? I believe this is one of the best ways you can try and pass one of these challenges. Let's get into it. Okay, Clifford the 25-year trader back with another video. And welcome to another Sunday night futures market open. So in the last video, I had spoke a little bit about day trading, and today I kind of want to reiterate that, but focus a little bit more on the other way that you can trade these markets, which is like the swing trading style. Now, I will say I'm a little bit new to prop firms. I am not new to trading. I've been doing that for 25 years, but prop firms I'm totally new to, so I'm learning as I go. And from what I've learned so far, you could trade these one or two ways. Now, some of you may even know a lot more about this than I do, but it's basically like you could day trade them, and usually that's futures contracts. Futures contracts only, I believe, for day trading, and you must be in and out of the market by a certain time. Usually it's 5 p.m. on Sunday through Friday, which is the futures market hours. But the second way you could trade these in your prop firm account is CFDs. And the difference is CFDs, you could hold them overnight. So that's what we're going to talk about today, swing trading. Now, if you're new to trading, I would say swing trading is easier than day trading. That's just my personal opinion. And so what I did basically, from what I understand, all these prop firms kind of have similar but different kind of rules. You know, they give you this drawdown, right? And the drawdown is the most that you're allowed to lose, right? So this one here, I believe this is a top one trader. They gave me $50,000. This is CFDs, by the way. So CFDs, I could hold them overnight as long as I want. And that's why I think it's easier, because day trading, you got to make decisions like every second, every minute, every 5 minutes. It's like all over the place. But with swing trading, you don't have to make decisions every minute like that. You could do what I call end of day trading. It's a very popular style for swing traders. It's called end of day trading. More about that later. But so the bottom line is they give you a drawdown. This one, they gave me, so they gave me 50,000. I think I paid like $100 for this. And or 120 maybe, I don't know the exact amount now, but I'm doing a few of these trying to learn how the whole prop game works. But so yeah, 50,000, right? And then they gave me the drawdown, and the drawdown I believe was 6%. I think that's like $3,500, which means out of this 50,000, as you see, I'm already down on the account. I'm down like maybe 2,000-ish, right? There's a little bit of profit now building in the trade I made, which we'll talk about in a minute, but I'm pretty much down, you know, from 50,000, right? But not to worry, because remember, I got 3,500, right? But here's the thing. I don't really have 50,000 and I don't really have 3,500. This is all what they call a simulation, right? So the 3,500 they give me is the drawdown. So they're not giving you 50,000. They're giving you $3,500. Understand that. That's one thing I've learned clearly since I started these challenges. So $3,500, right? Okay. You don't have 50,000. You have 3,500. Now, how much should you risk, right? Every trader is different when it comes to this kind of stuff, but here's what I've learned. Eval, you're not making money, right? The goal is to hit this funded deal, right? To become a funded trader, then you're actually making money, theoretically, if you're profitable, because then you get whatever the payouts and all that kind of stuff, right? Now, I have not gotten a payout yet. I have passed a few challenges, but then I blew the funded account because I didn't understand the stupid consistency rules or all this, you know, things they throw at you. But now I understand all that too. So to make a long story short, 3,500. The way I see it is, if you don't want to be an eval forever, you got to pick a point that you're comfortable with risking. So I say, you know what? It cost me $100. I got $3,500. Why don't we risk, you know, 20%, right? 3,500 times 20%. And some of you will be like, what, are you out of your mind? You're risking 20%? Yes, because it's the drawdown. I don't want to be stuck in this thing for 6 months. I mean, the worst thing that happens is if I blow the account, at 3,500, right? Then I blow it, but it's only $100 to buy another one, right? But hear me out here. So I'm going to risk $700, right? If I lose 5 trades in a row, that's it. Game over. Thank you for playing. Buy another challenge. Better luck next time, right? That's the game. Well, you could risk less than that. You could drop to 10%. That would give you 10 shots. You could do maybe 15%. That maybe give you 8 shots, something like that, right? But I'm aggressive. I want to do 20%. So here's the goal. It's 50,000 and they want me to make a 10% profit in eval. So I have to make them $5,000, right? And that's why I need to risk more the way I see it, because if you want 5,000 from the eval, well then I gotta make sure my trades are profitable. So here's the trade I just placed. Basically what I did was I was watching the NASDAQ last week, and I did a video about this last week also, telling you that you can buy support and resistance levels. And so this is the daily chart, and this is end of day trading. I was watching it every day, and I saw it, hit this high here. I saw it getting closer, and I know that this is the floor. I had a feeling that this level right here is the floor, 28,163. That's the floor, right? How did I know that's the floor? Because if I click on the low, it tells me right here about 28,000. If I look at this big candle right here, it told me 28,232, right? So I'm like, okay, well, if 28,232 is the floor, then I want to buy as close to the floor as I can. So that's exactly what I did. I put in an order and I bought at 28,235. I wasn't watching the market. I just said, I basically set it and forget it. I put the entry order right here and I put my stop loss. Now remember, if I'm taking a $3,500 drawdown and dividing it by, 20%, right? Okay, I could risk $700 on this trade, right? So if you look close at my stop loss, you'll see I'm not even risking 700. I'm being more conservative because I already took some losses. So now I'm dropping down to 15%. I'm only risking $450 on this trade. And why did I choose that level? Because I saw that support is here. If support is 28,235, then I want to make sure that hopefully I don't get stopped out, right? Because the reality is I could get stopped out, but I want to put it hopefully in an area that I don't get stopped out. So I'm like, okay, well, let me find another support level here. I'm going to risk maybe 300 points on the NASDAQ, 400 points, whatever, right? And that's what I did. And as you see, it's still pending now live. It's up a little. It's up like 700 here, which is good, theoretically, right? But it's not good because I'm still in the trade. So here's the thing. I need to hit the $5,000 profit target, right? Well, how am I going to do that? Well, I got to set a limit somewhere. So I look at resistance. Well, I see resistance here, right? Now, what I did, for those of you who are new to CFDs, I'm not going to explain everything about CFDs in this short video, but I'll make a whole series about that later on, how you can day trade, how you could swing trade, how you could trade the futures, how you could trade the CFDs. That'll be later. But for now, to make it simple for newbies, CFDs is called contract for difference, and it's basically like the Forex. You're buying this contract, whether it's the NASDAQ or this one is the Japanese, this is the Nikkei index, right? But you also got Forex pairs, right? Like not to go into everything, but you got Forex, the euro, pound, whatever, right? So think about it like the Forex, but I'm trading an index, CFD, same thing. So it's like the Forex. Basically, you're buying the index like the euro. Hope that makes sense. So I can hold it overnight. I can hold it for a week. I can hold it for a month. They don't care how long we hold it, right? But the bottom line is they want you to hit the target to end the evaluation. So I need a $5,000 profit. Can I do it? I don't know what the market's going to do, but I have a choice. Where can I get out, right? If I'm buying at support and my stop is underneath this support level here, now I need a profit target. Well, I see resistance is up here, 30,306, right? So that's what I did. I put my profit target up there at 30,351. And you're like, whoa, man, that's a huge move. No, it's not. The NASDAQ can move on the average 300 to 600 points a day. This is not that far away. It could hit this in a week. if some positive earnings come out next week or this week, let's say Tesla or all these companies that announce, their tech earnings, this thing could rally. And now again, we're trading. We don't know. I don't know the outcome. But what I do know is this: if I'm risking 455 to make 4,200, that's a good risk reward ratio. That's like 10 to 1. Will it help me pass the challenge quicker? I think so, because if I'm going for little trades, right? Like I'm going for $100, I'm trying to make $200. I'm going to be stuck in this eval thing for like half a year, maybe 8 months. Maybe some people might be stuck in the eval like a year. Who the hell wants that? You want to get out of this eval as quick as you can, so that way you have a chance of making one of these payouts theoretically, right? So what I did was I bought two. I bought 0.02 NASDAQ, and basically, again, the risk I'm taking is once again the $450. I can't lose more than 450. Now, let's say I'm wrong and tomorrow the market crashes and I lose 450 bucks, then I'm still alive. I'm still able to survive, right? Look at the balance. Look at the equity. 48,744 minus 450. Okay, so I'll be down to 48,294. But again, the drawdown is 3,500. So, I could lose $1,500. I could lose $2,000. I still have another 2,000 left on the drawdown. And remember, it only takes one good trade to get a good profit going, right? That's why this is a 10 to 1 trade. Do I know if it's going to make it there? No. Now, if I wanted to be a little more conservative, I could move the take profit down to here, right? Maybe 2904. That's a closer resistance level. That's easier to hit, and that's still worth 3,000. So if you're risking 450 to make 3,000, that's still a great trade. Whatever it is, 8 to 1. I'm not doing the math right now, but if you're risking 450 to make 450, that, in my opinion, is not a good risk-reward scenario, because you're risking $1 to make $1. Here, I'm risking $1 to make $10 or, something like that. So anyways, that's basically what's going on here with this prop firm challenge on the CFDs top 1 trader. I'll keep you guys posted to let you know how it goes. Again, 2 scenarios. I get stopped out, I lose $450, but I'm still alive. I paid $100 for the eval, right? And I got $3,500 to play with. If it's a profit, then I'm closer to passing the challenge, right? And that's the goal. You want to pass these challenges so you get the hell out of this eval thing and into the funded account, where you actually have a chance of hopefully theoretically getting one of these payouts that all the YouTubers are saying, like, oh, I'm making a fortune in these payouts, thousands, millions, whatever, right? Theoretically. So anyways, that's about it for the video. If you guys enjoyed it, feel free to like, subscribe, put your comments below. Look forward to seeing all of you guys in the next one. And as always, my friends, never risk more than 1 to 2% of your account on any given trade, whether it's your money or the prop firm, and always expect the unexpected each and every time you enter the market. Good luck with your trading this week.